Welcome to which is one of the best eighth wonder of the world, power of compounding. And it's nice. So today I am just going to talk about the concept, not much, but of course I'll be giving you the live examples which we try to not able to see that power of compounding is like a miracle or how it is eighth wonder of the world. It is a simple three things works, which is a discipline, power of compounding is a concept, and the long term. So these three together is a component which will make a miracle of your investment going exponential. So this is always seen that how exponential work. This is the best graph you can think of, that first almost 10 years you are seeing nothing and 20 years very little, and how it is exponentially has grown. So what is compound interest? So this is, I'm sure all of you can go back and start thinking about our mathematics class in 7th and 8th standard, where we always learn is a simple interest and a compound interest. And that time we just didn't realize the actual what we learned was a lifetime skill I can think of. And now we will go back little, but in a simpler word, it is just nothing but you are getting interest on interest. So if you have 100 rupees and your 10 rupees is an interest, so next year it will become 110. So the second year it will become 10% on 110. So these three things are very important, where we try to say you have investment amount, and then you have a rate of interest, and your time you are being compounding. So as your interest on interest keeps going high, and that's where the miracle happens, where you started getting compounding interest. And that's where the power of compounding comes. So I was just talking, and a few of you must have seen my status. I keep putting infographic of people putting a 5,000 or 10,000 for 20 years, 30 years, and how it is easy to make a 1 crore, 10 crore, and 15 crore. So somebody came and asked me, I tried it, but I am not able to see after 10 years. So I said, wow, what is the reason? Because if you have kept for 10 years and 12% it is coming as a returns, because I'm also doing. So then I asked, what is your learning and where you went wrong? Then their point is, Rachna, actually what happened in between, I need some money, so I redeemed it or I withdrew it. Then sometimes I felt that the market is too high, so I stopped it. So what I have realized, it's actually very simple. It's not a rocket science or something. But when we start putting our own mind too much, it's like a so much cook spoil the food kind of concept. And that's where it happened, because we don't like our monotonous life. We says, oh, SIPs are going on, what's so great about it? Or it's a simple things which is happening. But you believe me or not, when you go back to your thoughts, you will realize it, doing continuously, consistently for a longer time, you will get those things. Because yesterday I was having a meeting with IIM professors for the one of their research paper, and I was just talking then, when I go to the lot of colleges to do the wealth, they have the 2 marks elective, which is 40 hours sessions on a wealth spectrum management, or in a any concept on financial planning kind of it. So first thing I get to know from any of the kids there is how to double the money in 1 year. And I always think, and I says that, okay, I will do the stocks and which will make it a double or whatever they may ask, and I'm the one person who doesn't know much on stocks. Then I always give a very smile and say that if I knew how to make a double the money every year, I must be sitting next to Mukesh Ambani or somewhere else. Why the hell I'll be coming here? Because you may have the double the money for one stock, two stock, but portfolio you can't make it. So you have to be very clear what you are looking at. You can easily think about index is the good parameters, so sort of, if index is giving me 12 or 14% return depending on what time you are looking. So 12 to 14% getting a, which is called compounded returns or XIRR, or you can say that CAGR, whatever, it's a very, very good returns. So look for long term, not to. And I always believe when a lot of people says, okay, I'm doing LIC, Rachna, and I said that's good, very nothing wrong in that, but you don't touch the money when you require the money from LIC or any insurance. Why you wanted to redeem? So in your mind you have to think about it. You have kept this money aside, and you will see. So you will surprised to know that actually I have not seen my portfolio maybe more than 19-20 years. I saw only 1.5 year back only, because the concept was very clear that these portfolio I'm making for my kids education and for my retirement. My retirement has not yet come, so kids education is coming. That's a part of financial planning for us, that 2 years before you have to put it in debt. And that's the time I looked at. Of course, being in a right horizon, so analyst has been taking care of portfolio realignment and other things. So what happened? And I was surprised to see my own portfolio. Is it this is my own portfolio or not? Because your power of compounding, when you see your own portfolio, you will get surprised and you have to check twice or thrice, is it my portfolio or somebody else's portfolio? So I'll just put a small video. Please let me know if you are able to hear.
If you want to go around the earth and start with 100 meters on the first day and double the distance every day, how long do you think it will take? 1 year? 10 years? Let's find out. Within 19 days, you would have covered 39,321 kilometers, while the equatorial circumference of Earth is about 40,075 kilometers. You would have traveled around the world in less than 20 days. But what if you stopped after 10 days? You would have hardly covered a little less than 77 kilometers. This is the power of compounding. Power of compounding can help you to create a great wealth as well. How to leverage the power of compounding for maximum benefit? Start early and invest regularly. Nisha invests rupees 5,000 every month since the age of 25, while Nilesh invests rupees 7,000 every month since the age of 35. By the age of 60, both would have invested 21 lakh rupees. Assuming a return of 12%, Nisha will accumulate 2.75 crore rupees, while Nilesh will get only 1.19 crore rupees, which is 59% lesser than Nisha's wealth. This is why starting early is important. To create a wealth, start an SIP in equity mutual fund and
So this is a very, very powerful learning and a concept. Start early. And that's where I love to go for inductions and college, because none of us have that training in the college, that how we should start investing early. Whenever the kids comes of our customers or anybody, I feel very happy. Even they wanted to invest 1,000 rupees or 2,000 rupees, because they are learning which nobody has done it at the age of 22 or 23. So please try to understand. First concept for a power of compounding to have a miracle is start early. The amount is not important, but doing regularly, discipline, month on month, that is very important. And I always seen last 14, 15 years being in a right horizons and been working last 30 years. You don't know when this 5,000 rupees or 3,000 rupees per month will become 50,000 or 1 lakh a month. But the way you will see your growth and the comfort on a freedom in your mind to do whatever it is amazing. Because I was just talking to one of our board member, and he was trying to say that yes, he's planning to do the one research on retirement life. And his point is that when we are getting retired, it can be any age. It's not necessary at 60, it can be 40, 45 from a corporate life. The 3F will work very, very well. One is finance. So he was trying to explain that the comfort and a freedom in your mind is very clear, that when I'm retired, my regular income in per month, it will come from my portfolio. So it is like your money is working for you. Of course, second is the fitness, and third is fun and family. So what I'm trying to say, if you have started early, your freedom of decision, freedom of peace and taking your any retirement, new ventures, doing what you like is very, very early in the stage. So try to do whenever you start your first job, start making saving first and then saving into investments, because saving is not going to give you the returns. So this is the simple example I'm going to say how doing a regularly things disciplined way makes a difference. So I'm sure you may have heard of this story of known a person, the two friends who started the cricket career together. They were equally talented. Maybe A was bit more than B, but B went on playing for 24 years and A disappeared as failed to live up the success in early. So who is A and B? So it's none other than Vinod Kambli and Sachin. So the difference, what their own coach says, is the discipline between them. So discipline is the one thing which I love, being a daughter of army person's daughter. So I think so that came in grint with us, because we learned day in and day out from the how to be disciplined on the timing or work or anything. But this is a very, very important part. Whenever you have your friends, family, yourself, your next generation, please try to have this part, to have a discipline in anything. So when we have a discipline, it can be investment, it can be health, it can be sports, it can be anything in the world. I can say you, it is going to make a difference. So I'll give you one live example again on ourselves. We recently went for a vacation and we realized that we have been good in actually swimming in swimming pool, but we were not able to swim in a sea. And for swimming in the sea, we said, okay, we will have a life jacket and then we will swim in the sea. So our daughter says, no, we should learn the technique to do that, because we have not learned the swimming by the professional, we have learned ourselves. So we should know how to do it by the deep breathing inside the water and all. So we both went for, we have been going also, and we went in between last 3 days, we went again for one more small trip and came back. So you will surprised to know. So we were able to, he says that you have to start doing 30 seconds under the water, then make it a 1 minute. We were able to do 30 seconds. When we have a break between 3 days, we have gone back to 20 seconds. So anything which we do regularly and we do a disciplined way, it gives you the small impact in a daily life. And we have gone back to 3 days back what we have learned it. So that is the one thing which I have seen in a day-to-day life also. When we try to do a smaller bit day by day, you become a very, very powerful person in your knowledge, your work, your power of compounding, your investments, or health-wise either. But if we take a break anytime, it pulls you back and then go back to the normal routine. So this is the smaller story of power of compounding, which we always do.
Chinese bamboo is the world's tallest grass, which goes up to as high as 80 to 90 feet in a little over 5 years. When you sow the seed and start watering and nurturing it daily, you don't see it growing for 5 years. It would be frustrating, isn't it? But wait, miracle happens after 5 years. It grows from 0 to 80 feet in less than 90 days. Similarly, growing wealth through SIP also requires a lot of patience. Had you started an SIP of Rs 10,000 in September 2010 in large cap fund, the value of your total investment of 3.6 lakh rupees would have been 3.57 lakh rupees after 3 years. Had you stopped an SIP, this temporary loss would have been permanent loss. But had you continued an SIP at the end of the 4th year, your value of total investment of 4.8 lakh rupees would have been 6.95 lakh rupees. And if your SIP still continues till March 2019, the value of total investment of rupees 10.3 lakhs would have been 17.38 lakh rupees. Remember, correction is temporary, growth is permanent. So continue your SIP for long term to create wealth. Mutual fund investment.
So I can vouch it for this because I have been doing, I think so, from 95 odd the SIPs, and it really makes a lot of difference. So what I have noticed when we were talking on a research paper, it is a lot of people don't like a boring work. They say it is very simple, it is boring. We should do exciting things and all this stuff. So sometimes I always say there's nothing wrong in doing exciting. I remember previously it comes like a okay, how we will make a FNO, how to make a double the money, how to do daily trading. These things keeps coming on and off. You can just think of, but I always says have some small amount for your learning. So if you lose that money, it's not impacting your overall portfolio. So that is the one way I always tell to my customer. It can be anything. Please don't erode your things because of this. So one customer or a prospect met me yesterday, and she says, Rachna, I need. She's in a businesswoman, and she says I need 2 lakhs a month. So what I should do? So I said, okay, you just keep the corpus, which is giving you 2 lakhs a month, which is around 4 CR odd, and which will give inflation link to you till 85. And whatever rest of the money is there, you do lifestyle, you want a 1 crore car or 10 vacations or whatever. So your peace of mind is always there. So sometimes we have to make sure that whenever we are taking any investment decisions, make a small bucket for what goal you wanted. So it is not eating away the other buckets. So if you are having a retirement separately, you wanted a vacation separately, you wanted to take care of a car, you wanted a bigger villa or a house, keep those separately, and it should make sure that you have a peace of mind to do it, because something you can cut short, something you cannot. So as I told you, the second core part, first is start early. Second core part is discipline. And none other than Warren Buffett, who is the best investment father of all investments. Successful investment takes time, discipline, and patience. No matter how great the talent and effort, some things just take time. So you can't produce a baby in 1 month by getting 9 women pregnant. It is very true, because I always try to explain people is you think your portfolio is like a tree, and to tree to grow and start giving you flowers and fruits, it's on an average will take 10 years. And which is so true. In our house we have of course avocado and things. It took so long. Some in middle we got little impatient that it is good, not good. We went back and asked the people, we went back how long it takes to do it. And when it came abundance, and it was so nice to give it to others also. So sometimes it takes its own sweet time. Have patience and be together. Maybe like if for a tree you give the all manure and other things, you have a discipline to give the water, you are taking care of the plants or trees. So similarly, you have to manage your own investment goals. What are your goals? You cannot go blindly that okay, whatever leftover money I have, I will put it across and then I will achieve the goals. So this is the new things I have learned now, because I'm speaking lot many young people. So this girl is around 22. She's just joined her first job, and she has started. I told her to start doing 10,000 rupees SIP, and I met her last 10-15 days back, and then she says not even 2 months over for her, she started her job, and she's telling, Auntie, I see my app at least 4 times in a day, but nothing is changing. And that made me to think quite a lot. Is it I'm getting old, or my not able to manage what she is planning to think of? So I asked, why you watch? Anyway, you are doing a mutual fund. Even mutual fund NAV also comes only end of a day, which will come for you next day. So 4 days, what makes you think that? Her thought is, because if I see every day so many times, if money goes high, I will uh, do some investment money redeem and get some whatever her things she wants it to buy. So this is the another scenario which I have been looking, and I told her it's nothing wrong to spend. Otherwise, economy also will not grow. please try to keep money some percentage, and then you don't have to look. You think that it has gone from your bank, and next 5 years you're not going to look, and you will look only when you are required for it. Can be for your wedding, or it can be for car, or in a house, or vacation. Keep that money in a bucket, and you will not look it across. So this is the another thing she said, but that is not giving me kick for my investments, because my friends and everybody sees so much. So I said, they may be doing the stocks. So she said, yes. I said, okay. So I told her, okay, you start doing with the 5K one stock. So you play around. First, you do the model stock without money, and then you do it. I have not heard from her anything, but her friend who has been doing a stock told me, because they all are in the same gang whom I speak with. This says, I have come out auntie at because I borrowed from my dad, and that full money of 1 lakh it becomes zero. So sometimes you have to realize which is giving you kick, which you feel you're very happy. And if you don't know in and out of what you're doing intraday trading or FNO and all, it is not so easy. Somebody needs to spend time to understand that and then do it. If you don't know, boring thing works very well. So it's better you are giving to your advisor, or you're giving to mutual funds. That fund manager is going to take care of regularly SIPs very, very well. As I have already told you, the discipline is the one thing key for a success for your life and investment and portfolio. How easy it can be, you feel. So I was going through one of I think the biopic of Maria, tennis player, and she was telling, everybody was telling her when she wants, this is the pose, this is the champagne and all, but she says nobody showed us when we were working in a frozen time at 4 o'clock, going for the gym and working 18 hours to 20 hours for the practice. So the discipline of that 8 minute, 10 minutes, or whatever you are holding the trophy is been more important than 80 minutes or 800 days of taking the practice sessions. So same thing, when we see the portfolio size, we are very, very happy, but we are not realizing that we are been investing to achieve that financial goals on month and taking care of it. No doubt, as I told you, it is very good to take care on a disciplined way. Start early, start small, make a small percentage which you don't want it to touch across for anything else. Make it a goal based, don't have emotion attached to that. Small emergencies, try to manage yourself, and diversified, try to look your portfolios at least twice in a year. This is the second name of the disciplines to have a long term view, which is called patience. Patience is not the ability to wait, but how you act while you are waiting is very important. So this is the third part of the compounding, is always try to have a long term view. So I'll repeat again. The first was start early, second is a discipline, and third is a long term view, which is patience. So this is my best quote I always love, is somebody sitting in the shade today because someone else has planted a tree long time ago. So this is what we all have to do. We have to plant a tree for ourselves, for our investments. And how we are planting the tree? We are planting through the regular investment through SIPs, whatever the man then it can be. But the power of compounding is going to give it such a big one, the tree will start giving us a shade or the fruits through the where you can think the money is working, and money is working for you to give back the money. Patience is very important in the financial discipline. It's a correlation between both, I can say, long term versus short term. So long term is like a patience where you should think. For me, long term is always 8 years plus. So 3 years and below is short term, 3 to 8 is the midterm, and 8 and above. Why I am using these words 3 to 8 and 8 and above? Because the product what we use or what we scheme we can give, it depending on those. Excuse me. Don't take ad hoc decisions versus discipline investment. So this reminds me long back. I don't remember when I have also gone to one in our near house, the mall, and it was a crow. We wanted to buy something, and these kids were wanted to buy a new mobile, and I can see their mobile was anyway good enough, but they wanted to buy the better mobile. And one of the person says, "Oh, I don't have a money, so let me see my mobile app. How much mutual fund is there?" He redeemed, and he said, "I will buy it." And that made me to think again. He didn't think of it as it's a positive, negative. He didn't think it is a taxation or not tax, long term, short term. For a short term gain, he lost the long term. So don't have a long term gain should be taken by a short term. Please make sure that you have to understand this concept very clearly, which I do for a kids need versus want. What is a need which is you think you cannot manage with your lifestyle? So, but buying a clothes or buying going for out or going for some gadget which can postpone or not needed is a want. So please have this decision of need versus want very clearly whenever you are doing expenditure, which is not planned expenditure. So, for example, if you have, let us say, birthdays, anniversaries, or festival, you can plan for it. You can say that, okay, I will plan, I will spend 10,000 or 20,000 for clothing and plus whatever it is. But that plan you have to take care while investing is because you have taken those plan and then only you have started doing the investment parts of it. But you can't say that suddenly, okay, I wanted a 1 lakh, so whatever is I have invested, I will redeem it. So power of compounding goes negative when you start redeeming the money. The power of compounding, after this, I'm going to send you the Excel and I'm going to work few numbers. You will realize that how power of compounding works when your interest will be coming higher than your principal at the same time. So that's where the power of compounding comes across. So this is the graph where what I was talking about, start early and save consistently. So you will start earning, and I've been telling very consistently for each and every webinar what I do. Minimum 25% of your take home must go in a saving and the investments. Okay. So, and that it will become in your mind. You don't have to worry about it. I can tell you I'm not saying very wealthy perspective, but 25%, if you do it, you will be having a very nice peace of mind, never have an issue on the financial side. So make this whatever you're earning. It can be, I remember my first earning was 1800 bucks in 1994, and I started saving. So my dad has told me very clearly, don't invest on the amount wise. Okay, I will say 500,000 bucks, because when your money will start becoming big, you don't increase that much percentage. So always have a percentage linked to the investments part. So if I was doing there, that is 1800, let us say 2000, it is 500, which is 25%. So when I'm doing a 10,000 earning, I should start doing a 2,500. And then and there, wherever your increase happened, or whichever bonus came, your QPLC, APLC, whatever LC comes of variable pays, you have to follow the same format. And then you will realize the power of compounding goes over the time. So I'm going to have this part, which is the next slide, and I'll come back in this, is what the Warren Buffett's net worth. So he has started investing at the age of 14. So if you see, his 96% of Buffett net worth came only at age of his 50. So where he started at age 10 continues to be 90. And then he says that if I have just started 10 years later, my amount will be so less, 90 billion to 11.7 million. So 10 years difference is going to be lot of difference. So if you see that almost from 14 to here, it is similar. There is no way. And here it started going so high. So this is the story, which is again real story of one of my customer, very good friend of mine. He came to me, maybe I'm talking maybe 5 years now, or maybe much before he came. And he gave me a file. He says, my dad is expired. And when I was cleaning the cupboard, I got his file. Please see. And when I start seeing that, first thing I will have to see that these are tradable or not tradable and other things, because previously people used to normally buy in IPOs and keep it hard copy. So it means that why I felt it, these stories has been coming, because I remember that sometime it is good, it was hard copy, nobody checks every day what is in, I have in hard copy, all those stocks and shares. And because he kept for so long, his total value was 4 crores. So his keeping here for 22 years, and that person said me, Rachna, I never knew. And my father must be so happy. He also didn't know that that file having so much of money. So sometimes why I debate in my mind that is it too much of technology is good or not? Because when you see in your mobile that okay, this is the amount, this is there, you keep trying to do a play around with a sell, buy, and other things, and which is not giving you the power of compounding, which is the eighth wonder of the world. Most of the people who have stayed long, it worked wonderfully, and it worked for all of us also, because we were in Wipro Infosys. They have given us an ESOPs, and ESOPs anyway you have to keep for 5 years, and after 5 years it start giving dividend bonus and all this stuff, and it worked well. Because you keep those stocks for 10 years, 15 years, it goes very, very well. Especially in IT industry, whoever has got ESOPs, I'm talking about 99 to 2007, was all of them are lucky, because that's the time there was no FBT. So if you keep for 1 year, it's a tax free also. So power of compounding is the things which we have to realize here is never interrupt when it is not mandatory. No need of interrupting, of redeeming, stopping SIP. I lot of time people says, why you don't see the market? And I says, it is not in my hand. If I see the market, it's not going up and down because of I'm watching, because it's not my passion. So we have a research team, or we have the Anil, who are the fund manager, who loves, a passion is the market for them. So they will take care and we will just follow them. So my passion is to how to make people help and make sure that they are able to achieve the financial goals. So I will do, you will surprise, this is the another research done by, I think so, MFI or CAMFA, that most of the people stop SIP when the market is down. And the people who has an advisor will continue, because advisor doesn't need, he's not putting a money from your side, but he needs to understand your emotion and say what is right for you. And that's where the people who are being advisor get it more. It's not that they are putting their own money or something. They are trying to have a disciplined investment, of course, with the asset allocation and diversification, but they are trying to explain your emotions and trying to take you through that emotion, that yes, market is down, but this is the right time to continue. So this is the one of the reasons most of us, we have to understand investment is an emotion. Its investment is not money. That's what my thought is always. So it can be discipline, it can be long-term thinking, it can be power of compounding. You have to be very clear on your emotions. You cannot work on emotion side and say, okay, I want this and redeem it. So this is what a power of compounding, as I can say, the eighth wonder of the world or a miracle part of it, which gives you explanation. This is the live customer. You can see this person has within us for last almost like a 19 years. Our office is also 19. We are finishing 20 this year. 2004 till 2011, almost it's not much. And now you can see the gap of her or his portfolio. So net investment is 1 CR and total is 3.34. So the investment is continuously on the similar line, and that person's power of compounding is working so well. So you can see in 19 years, it's almost like a 3 times of whatever it is. And this is becoming a bigger and bigger gap. So this is called a power of compounding in a real life.
In a multilingual country like India, cricket is a common language 1.3 billion people speak. But do you know, this most revered sport in India has many similarities with investments. Let us have a look. Can you imagine a team of only batsmen? Never, right? We need a perfect blend of batsmen, bowlers and fielders to win the match. Similarly, to succeed in the game of investment, diversification is the only winning strategy. Just like a balanced team, we need a balanced portfolio to give us better returns. We can't hit the boundary on every delivery. Singles are just as important as boundaries. Similarly, we should invest in debt and equity. Equity provides us high returns when the market is good, and debt provides us consistent returns when the market is tight. Interesting, isn't it? Based on time, there are 3 different formats of cricket, and we select players based on their track record for each format. Similarly, we have different investment horizons. Whether short or long term, we must select funds according to our goals only. Lastly, just like a captain is necessary to lead the team, similarly, we should have a professional to lead and guide us.
So I'll just show you the Excel now. Please show me if you are able to do. Can you see my screen?
Yes, ma'am.
This is my all-time best thing. Of course, I will take you to one by one all the sheet. This is because any customer whom I meet, even recently, I'm going to meet a person who is 62 or 63 years old, and he told me, Rachna, why you didn't meet me before? I have lost everything and all. And I said, no, you have done amazingly, so don't worry about it. So most of the time, what I have realized it, all of us knows what is good, bad, and ugly for us. Only thing is, as per the research and the survey, only 12% has executed. So we have to see 2 things. Either we come into 12%, or we see how we can make 12% as 50% on execution. So this reminds me, we always try to do it in our office. We said when we are making for all the customers and other people to achieve their financial planning, why don't we do it? So this we were doing for everybody of our employees around few years back. And one person I asked, is it your financial planning is done, everything? And he says, yes, ma'am, I have done everything. I know how to make a cash flow and things looks good as achievable. But only one problem is there. Then I said, what happened? I have not executed. So it is like this, if you do best of everything, but if you don't start investing, you're going to be the same where you are. So this is a one thing which I wanted to specify here. Delay cost is much, much bigger cost than actually anything. So if you are planning to invest, 10,000 rupees, let us say, 10 years, 12%, and delay in the years is 5 years. So you will see that the maturity value is 23 lakhs, and if because of delay it is 8 lakhs. So the cost of delay is almost like a 15 lakhs. So 5 years has taken care almost like a 70% of that. So there is, you should not actually do, I can tell you, the postponement. Start now. That is the best thing I can easily tell you from my own experience, not me, because I'm the one person who executes much faster, from my customers and meeting. Because I believe the, even if you have 1,000 rupees instead of 5,000, start 5,000. You can add 4,000 later. But start that. We will wait, okay, when I will have 5,000, then I will start, and then it will become into the back burner. So there are different kinds of SIP calculators. So I'll take you the SIP calculator one by one. So if you are investing, let us say 5,000, or let me say again here also 10,000. You're investing for, let us say, 10 years. You can make it 12. Your maturity value is 23. So I always say you take a period above 20, because on an average, people will start investing from 30, 31 years onwards, or average is 35. So even at 35 to 55, you will have around a crore. So this is the one thing I can tell you minimum, but don't touch this. So here I am just doing nothing. I will ask along with the video, we'll send this Excel. It's just a simple formula, nothing God, anything is future value, where I am just trying to say how much you are investing, but this is compounding. That's where the importance is. This is the another level I have done. So this research have been going on in our circle. USIP in a different days. If you do a different time, you will do in the daily basis. STP, SIP. Is it return differs? You'll surprised to know. No, it doesn't differs. The value of compounding automatically takes care of, even if you do on first, fifth, or 10th. It doesn't matter. So you can say if I'm doing a 10,000 rupees, and what is a weighted average of your portfolio, means if you have a debt also and balance also. So you may have 8.5, depending on what is the debt and equity you're taking. But I always believe 10 to 12% is a good amount. So how many years if you do, how much money you will get it. That's the second table. So you are doing a investment amount and then saying how many years versus the returns. Here you are trying to say, if I wanted to take a inflation linked, okay. So here I'm doing around 10,000, here again on 20. I'm expecting 12, inflation at 6. So how much time I'm doing after inflation? This is the very important. Lot of people says that's not, I wanted to make the 1 crore rupees or 2 crore rupees in 10 years or whatever years. And this is my expected, how much I should invest per month. That is another way. So here, if you see, this is your future value has been already fixed. Number of years, expected returns. So here you are doing a PMT, you are going backward, saying that how much per month we have to do it. This calculator, if you do, and you run for yourself, and please execute. The answer is execute, execute, execute. There is no second thought. Whenever you will have, at least you will remember me that you were able to do, because a lot of people comes back, even I must have not remembered. They said, I have met you in 2007, 2006, and because of you, I'm able to do my daughter's wedding. I'm able to do this. And that's the best happiness for me, to make sure that somebody has started. So when I start any webinar, in my mind, I always believe even one person in this webinar take and execute, his lifelong, he will remember the basic concept, and that's more than enough for me to change one life. So I'll go back to my screen. These are the very common you will find. This is another things I don't know you are aware or not. Lot many things every day we are getting SEBI rules, but they are trying to do it financial influencer to take care, because a lot of people are not even, I think so, have a proper knowledge, but they have been doing a lot of videos and others, and lot of grievance has come. They have lost a lot of money. So there is nothing wrong, and that's the one thing I always do it in my webinar. I always tell, I am telling only what I am doing myself personally and what I'm recommending to my customer. So I always say that, okay, these are the proven facts, and a concept never change. I believe the concept never change. That's the way I work with. But even I'm not saying the others telling is wrong or right, because I don't watch any one of them. But because the SEBI rule has come, so I have been reading those SEBI rules. They are saying that if you are trying to implement from anyone, it can be tips, it can be investment, it can be anything, you are liable. So of course you can give a grievance to them and they will try to see how they can stop. But internet is so big, nobody can trace which video who is uploading or not. But be careful whenever somebody is asking for an investment. Concept never change. Go through. You have everything now to understand yourself and make yourself comfortable before you asking for it. This is the same thing I'm trying to say. Starting early makes lot more difference. You see, can see age of 25 versus 35, just 5,000 rupees versus 15,000 rupees. But because consistency long term, even the small amount, the amount is very high, and that's where the power of compounding is. With this, I am just trying to close my webinar with these two things. Lot many financial mistakes people have it in their 20s. They says, oh, maybe I may prolong my long repayment longer, retirement is too early. Why I need to invest? I'm young, I should spend more money. They're not even looking overall benefits, what they can avail, and financial literacy is not enough. So these are in 20s, 30s is they're not structured planning. Whenever if I have money, I will do it, otherwise I won't. They takes a lot of loan, then they don't have money enough, spend a lot of time, which I can say quotes unquote want versus needs, and then it will become a mental stress. So I've been asked a lot of companies now to speak with their younger generation because the stress levels are going high in I can say employees. Surprising to me is young employees earning much more, but they have a lot many stress on a finance. So that's the one thing I've noticed that people in my life, in my customer list, I have seen personally, who's earning much less have a bigger portfolio than a person who's having much more bigger money because they are not structured and not understanding that value of money. People in 40s and 50s, sometimes they said it's too less, too short time, and they want it. So these are the different case. I always believe don't reinvent the wheel, learn from others. That's the best thing. Start having your own resolutions, how you can try to do it. Do SIPs, make the emergency funds. Make sure you have a different goals, long, short, and medium term. Have very clearly good term cover and health cover without fail. With this, I close my session, and I'm assuming all of you will be having a great journey of power of compounding and have a peace of mind with tons of happiness. So I'd be happy to take any questions now.
Thank you for sharing valuable insights. I think we are already having question Q&A section. Meantime, I would like to request everyone to post if you are having any questions. We'll be taking one by one.
In mutual fund, I'm just taking the first question, what I can see. In mutual fund, there is no compounding interest effect because returns are not fixed or guarantee. Only instrument having a fixed guarantee, we can talk about compounding. No. It's a compounding effect comes because your NAVs are anyway changing. So if you see what I showed you, just one of the customer is only mutual fund way. So indirectly, the power of compounding comes even in the mutual funds also. It's not on the fixed. There are more than 40 mutual fund. What factors to be considered while selecting fund? Alpesh, there are many more factors. I'll ask Sanjay, I have done this webinar to give you the link, how to do it because we do ranking ourselves. Yes, I believe that we take 18 or if I'm not wrong, but you can take best, I feel, some of the parameters, but look at the fund management's view. Most of there is another webinar which I do, most of the emotion linked is behavior of people. They will just see, okay, this is doing good in 3 months, 6 months, 1 year. They are not looking across the longer term. The fund manager is actually a driver of the fund. So if fund manager view is correct, that fund will do very good. So before doing this, try to understand about the fund manager also more. But Sanjay, please give the link of that how to choose the funds. I will try to do as fast as possible that session again.
Sure.
So how rebalancing funds help in compounding? Yes, because you are rebalancing the debt and equity ratios. You are trying to do maybe from mid cap to small cap. Like now we are assuming that mid and small cap will do very good. So we are moving from large cap or multi cap to things. But your money is already the same. You're not redeeming the money. That same money you are trying to risk adjusted and getting a little more. So that's the way it's going to help you. Compounding is a money, not on sector diversification or anything else. How money is growing, that's where it's going to help. But if you do rebalancing, I'm sure it will grow a little bit more than even the what if you have continued. Is it good time to do lump sum now or use STP mode? If yes, what's the time frame? We as in a right horizon, we are very risk adjusted return perspective, yes, but we are assuming the market is going to go very high very soon. We are very bullish on mid and small now for they are the all-time low it's gone, and you should do lump sum maximum for 6 months STP. One new PMS has launched by RH. Would you like to know more in the next sessions? Yes, I think so, Sanjay. Please, when Vijay and they're doing, yes, we are coming with the aggressive mid and small cap because we feel they are PE less, and that's going to be for only for the limited period because we can't have infusion when the market is already up. So it is just open only till August. So I am assuming Vijay Prabhat, who are the co-fund manager, the next session they will be taking that. Sanjay, please take that note.
Sure.
Madhu, I'll come back to you because the second question, which is a various investment option can enjoy the power of compounding. It can be anything. It can be in a real estate also, you must have seen. It can be in stock and a mutual fund also. It can be everywhere you will have the power of compounding to take care of that. But most related is stock related. It is having a much bigger than the anything else. Any fund recommendation? I don't know about you, Sunil, much. If you can give me your short term, long term, what is your portfolio, what are the goals? So normally we don't believe it in a fund recommendation directly. We try to understand because our belief is almost everybody wants our goals to be achieved, and according to the goals we do the funds. If you can just give me the mail, I'll be happy to answer you more to talk about the funds, or Sanjay can help you out. While investing in index fund, the selection of AMC is important. No, selection of AMC is never be important because they are the passive fund. So, but yes, how accurate they are, the deviation with the index fund is more important. So when you are doing an index fund, you can see the deviation. Actually, they should have the least deviation that you should take it index fund. Index fund in India kind of it doesn't work. You must have realized last few time because of Adani, all of them has got a lot of issues, and a lot of people have gone back to the active, not on a passive, because passive fund is fund of fund, and there because it is on the market cap and other things. Even SBI mutual fund as of today, if I'm not wrong, 23,000 crore is in a bad debt because of index fund, which is a PF money. So that's one of the reasons. So because indirectly it has gone to them and they are NPA. So it depends, but you can choose any AMC. See the least deviation. Yes, Manoj, I want to know the good option to invest in a gold or a bond. Is it enough to invest in mutual fund till age of 35, which is good? I am 50. I have been investing regularly SIPs, but yes, we take gold as 5%. Bond is a very good, I can say, as a debt. So you should take a bond also instead of FDs. So the debt and equity ratios is 100 minus your age. That's equity. So that's a way you can do it. Whenever you are doing a debt, please take care of 4 things. Your traditional insurance, your PF, PPF, all retirals, whatever also comes under debt. Then you divide under bonds part of it. Most of the time when I see people customers think, they don't include that, and then they become too high debt savvy, and then we are not getting a power of compounding. MF returns are more or less predictable now. In last, it's around 3.5 more than current FDs. I observe this trend. I like to ask your opinion. As of today, I am around 16% in my overall portfolio. So it's not necessary when you are doing redemptions. It makes a lot of difference when you are doing SIP. Are you continuing or not? Makes a lot of difference. But yes, most of the time people say inflation plus GDP should take care. You take the Nifty. I have, because for these webinars and others, I keep doing research. If you take a Nifty now also for 20 years, it's coming approximately 12.2. So you will get around 12.2%. So I always tell customer, longer term, you take it an equity at 12% is a very, very good imagination on realistic way. Can you share with me the parameter of choosing? Rahul, Sanjay will give you the link of the things where we have a webinar on how to choose the mutual funds. Okay. But if you write a mail, they
Sure,
can
ma'am,
tell you as per our ranking sheet what are theirs as of today. With this, I have finished my question answers, and I'll be happy. If you have any queries, question, you can directly link. I've not even told anybody, but last week I went out and I felt it. I'll start doing any 5 people, women people, to have a financial coach, which is from my side. So if you know anybody who is a woman, wanted a financial coach for 3 months, which is free of cost from my side to just help people, I'll be happy to meet them.
We have few questions in chat box.
Okay.
Can I read it out?
Yeah, please.
Yeah.
Otherwise,
So
I'll just.
Mr. Manoj asks, I have one question. Do we have to invest in diversified or equity mid cap for best return?
Where are you? What is, where is the question?
Ma'am, it's in chat box. Mr. Manoj, he said
What's the
that
question? Can you repeat again? I'm not able to hear it.
do we have to invest in diversified or equity mid cap for best return?
Yeah, you should. So I keep saying, if you have a 10,000 rupees, divide into 5 types, any AMC, whatever you do your own analysis. As long as it's good, you have large, mid, small, balanced, or hybrid, and one debt. Because each cycle of a market have a different thing. So last 2 years we were actually on large, multi, and hybrid, and we are rebalancing to the small and mid now.
Thank
Yeah,
you, ma'am. We
next
have last
question.
last three questions. Like Mr. Santan asks, I was investing excess mid cap and small cap fund, but now both the funds underperform. What to do?
Yeah, you continue, they both are the good, it will do very good.
The next question is,
Stay stick,
do,
don't come out.
doing ULIP investment since 2009, having total ROI till date is 10%. Your suggestion to continue or not?
Yeah, please do that. See, sometimes it depends on how, where you are looking. So 1 year back, if I was looking, I will say that the same portfolio of yours must be around 12 to 14%. Now, when the market is low, it is coming. So, on an average, if you continue, you will be getting around 12%. There is no doubt, even though I don't know much about which ULIP you have taken, but I'm assuming I normally give ULIP only for the child education, which is the waiver of income, because I believe you take a pure term cover and SIP is a good combination than a ULIP for me. So otherwise, normally I don't give a ULIP much.
Thank you, ma'am. Last two questions. Mr. Santan asks, some corporate governance issues, when to rebalance?
Some government governance issue when to rebalance. I'm not sure of the questions. If you can write it details, I'll be happy to do that. SWP is better or SIP? Both are the same. It is like a, I can say, salaried versus business class. Salaried people every time get the salary, so they prefer an SIP, and business class they get a lump sum, so we do SWP. Anup, This is the first time I'm telling. I have not even told to my office and Anil also. Yes, I was just wanted. I will give you the details because I'm going to choose only 5 of them, which can be from anywhere in the India world, wherever it is. So yes, if you can write a mail to me, I will reach out to you on this program because I'm going to start from 1st June. So Sanjay, can you just give my mail ID and the mobile number? So, but this time because I'm focusing on women, so I'm sorry, but next time I'll try to take any gender. So,
Yeah, ma'am. I think we have done with the questions. I already
okay.
shared your contact details. Whoever is having any question, they can directly reach out.
So, thank you and have a wonderful weekend. Have best of time with your family and tons of happiness. That's all from my side, and I'll try to tell you that this is not a rocket science. It is a simple concept. Please continue, start early, continue long term. You will get this miracle yourself, and that time you will think it is the best thing you have done.